Hi, I'm Steve Spencer from SMB Capital, and today I'm going to walk you through a couple of what I call market trades which I took today. So on the desk, what we do is we tend to focus on trading the market via ETFs when volatility picks up. And the reason we do this is the market itself becomes in play. And what we find is for short-term traders, a large part of our edge is trading things that are in play. What that basically means is there's going to be more liquidity and more good short-term trading setups that we can execute. And so the ones that I look at most frequently are the SPY, which is the ETF that represents the S&P 500, which are US large cap stocks. And then the second one I tend to trade is the IWM, which is the Russell 2000, which is small cap stocks. Others will also trade the Triple Q, which represents the NASDAQ Top 100, which is, for the most part, very heavy on technology. And so it's very important when we enter into these trades that we understand what we're trying to accomplish when we do them. And so there's three different ways that I look at them. I look at what are known as a quick intraday scalp, which is spotting some momentum on the tape, and I enter that way for just a quick profit or quick loss, whatever the case may be. And a swing intraday, meaning I've spotted some very important support or resistance levels over the last few days, or possibly even over the last few weeks, and I'm looking to get in at those levels. And as long as those levels hold, try to capture a swing during the entire day, as long as those levels stay intact and the trend forms. And then finally, a swing trade, which will start sometimes as a swing intraday, and then when I get price confirmation above key multi-day levels, will turn into a multi-day swing trade. So why don't we take a look at two of the trades from today, which were both pullback long trades. The first thing we wanted to take a look at is the SPY hourly chart. And what we can see is over the last few weeks, the SPYs had topped out above 208 and pulled in over the last few days. If you look at before we had topped out, there was a nice uptrend there. And if you go back towards the beginning of the chart, if you look at right at that, the first blue line on the bottom, there was a large gap up above the prior high. That was a new all-time high. We sold off pretty strongly that day. Over the next day or so, some support formed there right around 201.75. And then what started was an uptrend, higher consolidation, and then another higher consolidation where we kind of topped out in the market. And so as the market became weaker last Friday after the jobs number started to sell off, I was looking at prior support areas to trade bounces. And if we zoom in and we take a closer look, what you can see is a pattern in the SPY of strong down move, bounce, strong down move, bounce. And so basically we were set up coming into today that if you looked at that prior leg down, something equivalent to that last leg down approximately took us to that support from the higher time frame around 201.75. And so that's when I shared in our morning game plan, hey, let's take a look into 201.80 on the SPYs, and we'll take a look at a long trade and we'll see how it bounces there. One thing I don't know, when I buy there, I have no idea, is it going to bounce 20 cents and then go lower and I'm going to get stopped out? Is it going to bounce to that next blue line, the higher level, consolidate there, then break the most recent downtrend we've seen over the last few days? If that's the case, if we actually close above there, which it doesn't look like we're going to do today, then I might be looking at a swing trade. Otherwise, it's just an intraday trade, which I want to step away from. I want to talk a little bit about the IWM trade I made this morning as well. It's a little bit different in the sense that the IWM is in a longer consolidation right now, and it's really going up and down very powerfully in a 3.5 point range, let's say. And if we go back it's about a month or so, we can see that we topped out above 118. We came off over a course of a few days pretty hard down to the 114.70 area. Then over the next couple of days, we gapped up right around to 118 again, got hammered, and then the third time we got hammered again. So basically what we have here is a pretty nice size range where we're moving very strongly off of both the resistance and the support areas. And it's as simple as that. The trade is as simple as that, which is we're not violating these levels. On the upside, we're going above 118 a little bit, but what you can see is once we've got back down below those 118, just very hard, strong, and you can see that with those big red candles all 4 times. It's actually all 5 times that we were above 118. Once we got below 118, it was boom, very hard. And you can see 2 out of the last 2 times before today, we got down to 113.75. Just incredibly powerful moves to the upside. So from a risk reward standpoint, we always want to then get long when it pulls back there because it has a history of moving very powerfully off of those levels. And again, same thing, shared in the morning meeting. In our little game plan sheet, you can see right into 113.70-ish is what I said. And what I'm looking for is a quick 1-point move off of that area into the mid 115. So let's say 115.60 to 115.80. And then again, if I get that strong move, kind of consolidate up there and then get above 116, that to me then becomes a swing trade. In this case today, again, it failed right around 115.80, so I sold most of the position. Looks like we're not going to close above 116, so it just becomes an intraday trade. I wanted to point out technology assist. What I do is I'm making a lot of trades. I'm in 7 or 8, sometimes 10 or more positions. One of the things that I do before the market opens, I know this is the trade that I want to make. I hit a little button. I have a script that I've written. It pops up. It automatically populates a default price, share size, stop, and then I input the stop, and then I input what % I want to hit out in case I want to hold a little bit just to keep an eye on it. And I would recommend, if you have the ability on your trading platform, whether it's a pullback trade to get long or a fade trade to get short or breakout trade, to kind of take advantage of the technology, because it's very hard right on the open to take advantage of all these different things. And I just wanted to share a little bit of one of the ways that I use technology to help make my trading a little bit easier for me. Thank you.